Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the President, Director, and CEO of Gryphon Digital Mining, Rob Chang, to talk about April production and their post-halving outlook for the year, aggressive growth plans, and M&A landscape we're seeing in the Bitcoin mining sector. So we've got a lot to talk about in today's presentation, some great questions from the audience, but before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. Anthony loves it. It helps get this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join. We just crossed the 43,000 subscriber milestone. We'd love to have you as part of the community. And finally, you guys, leave a comment in the section below letting us know if you're currently holding shares of Gryphon, your thoughts on April numbers, and their growth targets for the back half of this year. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got the President, Director, and CEO of Gryphon Digital Mining, Rob Chang, on the channel to talk to us about April production results and their growth outlook for the remainder of 2024 in this post-halving world. So a really exciting discussion today. We've also brought along Anthony with us, our resident Bitcoin Mining Analyst. A lot to go through, but first things first, Rob, Anthony, thanks so much for being here with us.
Yeah, well, thanks for having me. I always super enjoy being on this, so really appreciate coming back on.
Yeah, there's a lot going on in the space right now. We've got a lot of Q1 results coming out. We've got a lot of April production results. Obviously, April, a very pivotal month for the Bitcoin mining community, as we saw the halving, we saw transaction fees, rune activity. Never a dull moment in this space, Rob. What did you see in terms of highlights from production and operations in April?
Yeah, April is certainly a fun month, given that the halving occurred during that time, and at least for us, I could say we saw some of our best days ever in terms of the Bitcoin rewards we generated, simply because of the surprise tripling that occurred. But anyway, let's get into the details of what actually happened in April. So for April, Gryphon produced about 40 Bitcoin, which translates into about 2.6 million in average value, if we're using 66,183. As the average observed price for Bitcoin during that time. That translates to about, call it 1.33 Bitcoin a day, or just over $88,000 a day in revenues for us. So certainly a good month for us. So we continue to be very strong on Bitcoin efficiency, which we're always really proud of. We tracked in at 43 Bitcoin per exahash, which we believe still is in the leading group for that. And we had a record self-mining again. We've been announcing this on a monthly basis, and yet again, we've hit another record monthly exahash. We did 914, and that's because petahash. And that is because the S21 200 terahash machines that we announced earlier, saying that we're upgrading our fleet, showed up earlier than expected, installed earlier than expected, and are hashing along, improving our hash rate. And of course, our machine efficiency dropped because of that, averaging in at 28.7 joules per terahash for the month. So overall, very happy for April, and looking forward to seeing the continued good performance going into subsequent months.
Yeah, you mentioned about the halving itself. So those few days after the halving, I mean, you saw the same spike. In my recent article, I highlighted Core Scientific, because what they were doing was every day they're announcing their Bitcoin production. So it was easy to see the differences in terms of pre-halving, where they were averaging 30 Bitcoin a day, and the 24 hours post-halving, where they actually achieved 57. So that should have been close to 15. But they effectively mine close to 4 times their, I mean, you mentioned tripling. Yeah. So did you see that tripling effect on that sort of 24-hour period afterwards?
Yeah, exactly. For the 1 or 2 days after, we were seeing a triple to quad. I haven't done the exact math, but it was just much higher than I've ever noticed on our dailies, and that was certainly a very welcome event.
Yeah, in terms of production, and yeah, I just checked on the we've had about sort of 9 or 10 of the companies announced there, and you're certainly in the top 3 at the moment in terms of Bitcoin production per exahash. You've sold sort of like a larger amount this month than you've done previously. Is that repaying some of these machines, or can you explain what the reason for that was?
Yeah, and if we go back to the lengthy discussion we have about hodling versus not hodling, this is going exactly on how we operate, which is we see our Bitcoin stash as working capital. And we wanted to improve our operations without diluting our shareholders. We do not believe in issuing equity just to hold on to Bitcoin. And so we financed the purchase of these new machines with the sale of Bitcoin.
Yeah, I mean, it's interesting. I look at the companies that are hodling and booking the revenues for the April period, are booking at something like 61,000 per Bitcoin, and those that are selling on a daily basis are booking close to 66,000 as an average, because you're getting the benefit of the average price throughout that month. So, as I said before, when the Bitcoin price is rallying, everyone wants to hodl, but as soon as Bitcoin price, change and the volatility comes in, you can sort of see how a lot of these companies who sell on a daily basis and believe the same way you do, that, it's using that, using the working capital, including Bitcoin to grow, is still a valid option.
Yeah, and I certainly agree. I think that is the better long-term operational way to manage, simply because if you're going to start hodling, you are then by necessity committing yourself to being cute, so to speak, on when you actually do sell and having to really time the market, as opposed to just making an ethos to just sell consistently the percentages that you need or for whatever program you have. And it works out that you get a much smoother revenue profile because of that, as opposed to potentially getting caught with your pants down if Bitcoin dropped down to 50s like it just did fairly recently.
Well, and Rob, the other thing that I just kind of thought about as you're saying that is, if you're going to have a HODL strategy with entry and exit timing, right, you're going to have to dedicate resources, internal FTE, time, energy, money towards predicting those highs and lows, right? So it also takes away focus from your core operations, in addition to having to be cute, as you say, and time the market. Now, quick question on the S21s, Rob. You said they came early, they got installed early, which is obviously phenomenal. How are you seeing the performance? Because we heard Ben from Bitfarms say the T21s were really outperforming. Anthony, I think you said 25% or something from the box. Eh?
I think it was higher than that price. I think he was saying 30% higher than was on the box. 30. So significant performance, and we are seeing a number of miners in their updates this month installing T21s as opposed to S21s. But we've not had as much feedback on the S21 performance yet, so maybe you can highlight this, Rob.
Yeah, are we seeing those same benefits, Rob?
Yeah, certainly that's a very good point. We did have a few DOA machines that we're working on right now, but I would say it's probably about 5% of the machines that we ordered had issues. But that's standard for any order with pretty much any batch. It's very rare that you get 0 DOAs, dead on arrival, for people who didn't quite catch the acronym. But I have heard anecdotal evidence that S21s are a little less reliable than T21s. And so on a go-forward basis, we'll keep our eye on it, but we may also move over to the T21s, or maybe even a different miner producer, if those opportunities economically work out better and have a good consistent work history.
Did you get the opportunity to test any machines before you make orders, or is it a case of? I mean, I know some of the big players, they get sent test machines. I was under the impression that all the public miners would have got testing machines to sort of to test and see, and then you like what you see, you put your order in. And now that some miners are actually going out and putting big orders in for the S21 Pro, is that something that interests you? Or I think again, going back to Bitfarms, they're using the hydro for a small amount of their order, and they're seeing some real benefit in that. Are you sort of like you're not looking just down one suite of machines? You're looking at the whole market, even in terms of micro BT as well, sir.
Yeah, I would say that we actually have a few machines heading our way right now from a different manufacturer from any of those two that we're testing out. So we're actively looking to see what is the best. And for us, the decision is always twofold. One is knowing the history and the consistency of the machine itself, and of course the producer, but also, again, it's the economics. Again, a bunch of CFOs running this company. And so it's really how much am I paying versus what the return profile looks like. And that's how we pick our machines. It's really just those two things that we look at.
And just to take it one step further, if we go back, I'm going to say nearly 3 years ago, miners were using about something like a 6 to 9 month lead time on ordering machines and getting them delivered. What sort of, if you have the sufficient funds now to buy machines, what's the lead time from order to arrival in 2024?
Great question. Yeah, 2021 was a very difficult time where at best you could get a small amount per month. And that's the best you could possibly do. which was great because that's one of the reasons why everything took off, was because there was a very tight supply, and Bitcoin miners who had machines already were just printing money or printing Bitcoin, so to speak. The lead times, then definitely you're correct, and I would say that right now, depending on size, you could get them almost immediately within a week or two. And so when I was purchasing mine, although admittedly my batches were a little smaller, I was expecting everything delivered next week, and that was my expectation when I talked to them. I believe that there is significant supply out there still, that you could probably get whatever you wanted within a few months. I will be looking forward to happily testing that in the near future once I have my ducks in a row with location.
Hey,
yeah. So you find now. So it's a lot closer to actually order time now. I mean, I know mining companies were paying paying a premium to have them delivered early in 2021. I mean, some mines were paying $80 a terahash, and if you think now what most of the mining companies are paying, sort of, we've seen what the likes of Iron and Bitfarms and Riot and CleanSpark, with their big orders, they're paying sort of between that $14, $16 a terahash for machines that are far more efficient than the ones in 2021. So if you look at prices don't seem to be coming down, even though the efficiency seems to be improving all the time.
Yeah, it's a great situation to be a miner with capital, absolutely. And so I'm currently operating on the assumption that if I want machines, I can get them fairly soon. And at some point that's going to change, but in the meantime, that's how I'm operating. And it's actually very interesting, the whole mantra, or the previous world where you were required to make massive orders that get dribbled out to you, seems gone. And I was just looking at one of our peers, I'm not going to name names, but I still saw an S19K contract, which are still being delivered now, and they paid low 20s. Just a massive overpayment now when you look at what is available with a more efficient machine and what you could pay for it. So I think that world is gone. And unfortunately, those who did those massive purchases, although it looks great when they first announced it, now it's kind of biting them.
There is a differential in price for the actual machine itself. So maybe the return on investment and the reliability, which are two metrics that we haven't discussed yet, it can certainly work for some of those. I know a mining company that have been putting in S19 J Pros, the 120 terahash machines, and they're getting great results from them. So it's the payback can be quite quick, and so it's horses for courses. I also know a miner who got like an enormous amount of XPs that aren't working. So there's it's the same. You take your chances, and you roll the dice. So it's good that time frame's down there, and actually the opportunity in the market with all these other, we talked about probably the two or three big mining producers, the Bitmains, the MicroBT and the Canans, but there's other entrants to the market this year. So we've Block have announced a mining machine. You've got Bitdeer announcing the Seal Miner, probably the best name for a mining machine out there at the moment, and you then got Auradine, which are sort of like heavily invested from Marathon Digital, to bring out a machine as well. So there's going to be and those are ones that we know about. I'm assuming there's probably even more out there, but those are sort of 6 names on the table, which probably from your perspective is great, because it means that you've got the opportunity to not just go down one or two routes. You've got the potential to look at other opportunities, and for your benefit, when you've got more, I'm assuming competition works in your favor.
For sure. And it's something that we've, as an industry, been looking forward to, really, because in the past, in 2021, we were forced to effectively provide free financing for machines to be dribbled out to us by giving 100% payments up front and just waiting for the machines to show up, which is crazy and almost you don't see in any industry. But because we were beholden to 2 players, really one, that was the case. I think that is moving away. And that's great, because I don't see it being very reasonable where I put up 100% and wait a year to get my last machine.
Are you still having to pay everything before delivery, or are you getting some terms where you can make a payment post-delivery? I think we've seen a couple of miners highlight the fact that they can pay, I think it's up to like 12 months post-delivery, the final payment, which was unheard of in 2021. It was quite clear, the strategy of making those sort of 3 different payments: payment on order, payment between order and a certain period, and then the final payment was literally 30 days before delivery. So there was no issue then with the supplier. they had all the money before they even sent out a miner through the post, like, or however, fly it over or ship it over from China.
Yeah, yeah, that's such a great scenario for them. I envy. I would love to be a miner producer. But yes, we're starting to see more flexible contracting, and it's really because there's a lot of alternatives, not even just for other builders of machines, but even resellers. Many of them have held on to product and really want to get off them, and so they're very flexible nowadays.
Yeah, that's great to hear, Rob. And you said you've got a couple miners heading your way that aren't from the big two, so maybe some seals are heading your way. Who knows? But speaking of growth here, you're talking about obviously the great conditions for purchasing equipment, the good prices, supply chain benefits versus a few years ago. Gryphon has a very aggressive growth target of 10 exahash this year. You mentioned you just hit a record high in April in the mid nines. Or just under 1 exahash, I guess. How are you feeling towards that growth target? And specifically, what levers are available to you as one of the smaller miners in terms of financing growth to get to that 10 exahash?
Yeah, that's very interesting. I spend about, let's call it 75% of my time looking at M&A. And one of the key things I also wanted to note is that we are our 10 exahash target is an aspirational target as opposed to an actual hard number, because it is a little quote unquote crazy to go from 1 exahash to 10, but it's really just to show the scale of how we're appreciating and how we're approaching things, in that we're not going to look to grow 20 to 30% to declare victory. We're looking to set ourselves much higher. And that's because we came from Ride and Marathon. We were bigger companies before, and we're looking to recreate those again. And that's the way we look. So we are certainly pushing towards that. Now, that being said, what are we looking at? So the profile of the companies that we're generally seeing span anywhere between low end 300 to 400 petahash to multiple exahash opportunities. And I've been telling my M&A team and anyone who've been chatting with is that we're not looking at doing these singularly. We are looking to probably do these in parallel. And so as these opportunities come to fruition, we're just going to start announcing them. We don't have anything close yet. We're in active discussions with several just to get our heads around it, potentially put in LOIs, things of that nature. But there is a scenario where we're adding maybe 300 to 400 petahash in one situation, adding 1.5 exahash or 2 exahash in another, and announcing these layered on top of each other. And I think this is kind of like a rolling stone scenario, that once we start announcing these things, more things will pop up, more opportunities will pop up. I believe our share price will go up more with it, which will give us more firepower to get even bigger. And so we believe that once we announce the first 1, 2, 3, we'll be able to announce a much larger 4, 5, 6 as we go forward. And hopefully that occurs before the end of the year. But again, it's an aspirational, aggressive target, but that's what we're looking for.
Do you see the opportunity with some of the maybe larger non-public miners, because you're now a public miner, in the same way that obviously USBTC saw the benefits of merging with Hut 8 and able to sort of like, that merger of equals, as it was stated when they joined together, is that sort of like, rather than sort of maybe look at there are a number of public miners out there, but there's also some very, very big non-public miners that we sometimes hear about. I've covered a couple of them on mine at Corm in Texas who are doing a great job as a non-public miner, but there are limitations to what you can do as a non-public miner. You guys are fully aware of that, because the last couple of years you've been putting all your updates out without sort of like waiting for that moment to sort of say, right, we're all listed now, and this is where we can really start doing what we want to do in terms of growth. Is that the sort of areas that you're looking at as well?
So let me first start off by saying I'm not sure if I know everyone that you know. So if those people are open to conversations with Gryphon, certainly let me know offline. But what I would say, because you never know. What I would say is, I would almost say that is actually our preferred pathway, is to find a large private miner. The reason being is that we were private, so we know fully the whole life there. Capital is extremely hard to come by unless you just so happen to have a very strong backer. Ideally, it's a nation or a very rich someone behind who's just willing to hand you money constantly. That usually doesn't exist. And so if you're going to go into the market looking for capital, you have over 20 different public miners doing that ahead of you that can provide investors liquidity. And so I think it's very challenging for any private miner, regardless of quality, to be able to get significant amounts of capital unless they have one of the aforementioned sugar daddies, for lack of a better term, that will help them out. And so I think we're now in the reckoning period where they're realizing post-halving that they don't have the capital to improve their fleets, and that they're realizing that their only way, if they still want to participate in the Bitcoin upside that we all think is coming, is that they need to go public. It will take way too long if they're going to try to IPO or try to go direct now. It took us 2 years. So if they do that, likely they're going to miss a cycle. And so their real only viable path is do an equity deal with a public miner now. And so then it becomes, do you want to do with Marathon, where they're going to get rid of you and away you go, and you probably have no say? Or do you want to join a Gryphon, where you're going to be a meaningful part of that, potentially be major partners going forward, and you grow together? So I think we present a very attractive opportunity for that type of miner, and we're certainly looking to working with them. The struggle that we are seeing right now with some of them, though, is that it's early in the process, and they need to get disappointed first to become reasonable. And I don't mean this in a negative way, but you look at public comps, you put in public comps, but unfortunately, private companies do not deserve that valuation. Otherwise, they would have had that type of valuation. And so I think what we need to see first is a little bit of a period of disappointment where these private miners don't get what they're asking for. I've seen some pretty crazy ones that I was actually shocked that they thought that they were worth that much, especially with public comps below what they're asking for, which I don't even understand. And so I think that needs to be reset a bit. But at some point, that's going to come out, and then we'll have more reasonable valuations, and we're going to see a lot more M&A activity. Hopefully, with us leading the way doing it.
I mean, yeah, I mean, you're absolutely right. I mean, we've had so many miners now who've like literally publicly disclosed how much it's cost them to grow in terms of infrastructure, in terms of buying machines, and the amount of if I could count the amount of questions I've had, in DMs about the amount of times that CleanSpark are buying bit farms, or Marathon are buying bit farms, it's just not. It's never going to happen. I mean, you can buy the sites, buy the miners. You've already explained there's no real bottleneck on buying mining machines anymore. Now you can pretty much get your orders in there, and we've heard no one being delayed. You just articulated you're getting your machines earlier than you expected, and so that's going to be the same probably across the board as well. I for some reason I get probably about 7 or 8 DMs a week from companies in China thinking I need mining machines. I've not even seen a mining machine. I'm going out to Texas in June and going to have a look at some sites there, and that'll be my first impact where I get to see a facility. But I get these texts saying, we can send the latest machines at these prices. I'm not interested, but they see my update on LinkedIn thinking I'm some sort of mining, mining company. But I'm not a mining company. I'm more, on an analysis side of mining companies. But it's a good point. And if you're, I mean, I look at sort of like infrastructure at sort of 8 to 9 million per exahash. And we just had a conversation about mining machines. If you're paying 16 million for every exahash, that means you're around about the 25 million mark per exahash in terms of infrastructure and mining machines if you were to do it yourself. And that should give you sort of like probably a sort of a reasonable start at where you should be. I don't know what your view on that is, Rob.
Yeah, I think that is the case. I think the whole conversation of public miners buying other public miners is a little overblown and fueled a little bit with the lack of understanding of the mining operations of companies. Because I think at the end of the day, the only reason why we'd see public miners buy each other is really to get access to efficient operations and size. It's really just those two. And so you're basically in the first scenario, basically buying the management team and buying the contracts or facilities that they've located, or just straight buying size on top of that. And I think that is the issue, is that those who think the public miners will buy each other are fully ignoring the cost structures, the debt structures of those different companies, and how cheaper it is to replicate that company yourself. And the only reason why it wouldn't be better to replicate it yourself is for some reason if the operations that the company specifically has are supremely more efficient than anyone else's, or larger. Actually, not even larger, because larger could be super expensive.
Yeah.
It's really are these more efficient operations that I can't replicate myself? I think that's the only scenario where public miners buy other public miners.
100% agree, Rob. There's maybe more of an issue with finding infrastructure that's available. That might be the bottleneck. So that might be a reason where you'd even consider paying a premium to have that infrastructure, and get your mining machines up and running and get your revenues in. But we've already spoke about the lead time on mining machines isn't an issue for anybody. If you've got the money, you can go out there and buy brand new ones, the most efficient mining machines on the market. And once those S21 Pros come out at 15 joules a terahash, it's going to take a while before they get sort of like beat in terms of efficiency from another provider.
Yeah, and I actually want to touch upon that a little bit more. Is like it's not just necessarily an infrastructure play. Like I don't think you necessarily, although it's helpful to own the asset because again, fund gen capex. If you have long-term contracts on hosting that are extremely efficient and low cost, that's just as good, if not better. It's funny. I just had a very long conversation with a former telecom analyst who actually railed against buying infrastructure because it didn't make sense according to him. Because telecoms, he would understand infrastructure very well, and that if you could get away with just doing contracting, it's actually a lot better because of the whole return on capital angle, which he believes is the way to actually look at mining companies. Which I thought was a very refreshing, different perspective because I know the industry is the investing public is generally tilted very hard towards owning infrastructure, but this is a institutional telecom analyst who actually went fully against the other way and said, if you can get away with not loading up on capital, it's even better because it's really a return on capital conversation for those who care about depreciation, which you really should, and all that, because once you start layering that in, it becomes very difficult to be profitable or have good returns purely. Once you go very aggressive on the capital side. So that was a very interesting conversation I had recently with a former telecom.
I managed to have 30 minutes with Fred Teal in London on last Monday or Tuesday. Tuesday was, and I had the same conversation 2 years ago when Fred spoke to me about the asset light being the way forward, and it's obviously what you guys are doing, what Bit Digital are doing. And I said to him, I said, it's interesting this year that you go out now and you purchase some sites. I said, where do you see this ending? He says, well, end of 2024, we expect to be 85% infrastructure owned. And so that's a whole U-turn. That's a whole U-turn. And I suppose when you're that size of a company and control, does become an issue, you need some like control over your operations. I mean, I've seen your updates before you were even public. I mean, you used to send them to me, and you're always doing really well every month. I can't say the same for Riot over the last 2 years. I think there's been 2 months where they've had, I would say, a good update, and we've talked about this before. December 2023 was a fantastic update, broke every record in the book, 1,850
You say
Bitcoin
marathon, Anthony.
Marathon. And May last year, when again it was the 2 months where we had significant rewards as part of the deal. So having their own pool, helped them, and I think it's helping them in sort of like in April as well. They've eclipsed their Core Scientific for the first time in 3 months. So. But that conversation has gone the other way around now, and Freddie's all for buying infrastructure. And I think 85%, if you think about the joint ventures they've got in the UAE, they have to have, it's not their facility, they've got to go out there and, they've got some other, I think they've got some other plans for other countries, other continents as well.
Yeah, and it's entertaining because Marathon and us, in my opinion, were the two primary ones that were asset light up until they decided not to be.
Yeah.
And so we've watching them, and without saying anything about Marathon at all, I believe it's possible to continue doing it with an asset light model. It just needs extremely tight controls and a lot of really good due diligence on each one of your partners to make sure they don't fail you. And it seems like they've stumbled a little bit because of one area or another, and I don't want to get into it.
No, it's not bad.
But I believe, I believe selecting the right partners, because our proven partner has been fantastic. Our uptime is fantastic. And so finding more of that, making sure you're on top of that might be the answer. But I also totally recognize that at size, it is difficult to be that on top of everyone, definitely, or you need a very competent, very big team. Again, not implying anything, but it's just necessary to do that. And frankly, it's not as if we totally disagree. We are looking to purchase at the right price facilities. But of course, my preference would be to continue finding good hosting partners that are acceptable, which is a bit of a challenge, but I think is out there, and we're also still looking at that.
Now, Rob, you mentioned ultimately it all comes down to profitability, regardless of which of the two models you're going for. And I think Anthony and I would both agree with that at the end of the day. Speaking of profitability and costs now post-halving, what is your break-even cost per coin at these current rates we're seeing in terms of transaction fees, so on and so forth?
So interesting question. We actually haven't announced that yet. So I can only really go by what we said before. 2023, we're 18,200. By halving, that means it would, by math, really be 36,004-ish. I can say that we're not too far away from that number based on what we've been observing so far, but we were planning on announcing our quarterly, actually next week, And so we'll look forward to pushing it out then. But based on official numbers, it's effectively, I would say, you conceptually say a double of what we reported before would be in and around the ballpark.
Yeah, even directionally.
In terms of energy costs, Rob, does the energy cost change, or is it fixed for you?
It fluctuates.
So
we do have correct
market rates factor, which most of the miners are using market rates. So, you know, I mean, I know you guys aren't putting your energy costs on your updates, but we're now seeing other miners put their energy costs on. And what I'm seeing in the energy cost itself, and it's sort of like as difficulty increased, it takes you more to mine a Bitcoin in terms of energy than it did in December. So I've looked at a few of them. I'm not going to name names, but I've seen the energy cost rise probably per coin in terms of about 4,000 or 5,000 since January. So are you seeing these without, and you know, are you seeing the sort of like there is an impact to energy costs, and therefore when you will announce it, it's, you know, I mean, 18,000 was, you know, if that's 2023, then I would assume that just the energy cost itself is going to be, you know, higher than that for literally all the miners, apart from maybe the ciphers and the the TeraWolves who've got these low fixed PPA agreements.
Right. Yeah, no, it's a good question, and we intentionally don't break it out because I think it's a little bit cherry pickish, if I could say any other phrase, because really an investor probably doesn't care about one cost. They care about all the costs because that's I run my company and that's how the company operates. So we prefer to just say break even, not because we're hiding anything, but because I don't want to mix it up and start saying electricity only, which some do. And it makes numbers look, in my opinion, artificially low when all you harp about is electricity costs and not the break even, which is the true operating for the company. What I would say is that we have looked every so often at our electricity costs, and at times we're actually among the lowest cost guys, period, if I was just to come out and say electricity costs. But given that we have a fluctuating electricity cost profile, we didn't think it was in our best interest to break it out for the first reason, as I said, is in terms of not mixing up the details, but also because we don't want an overreaction when it goes up because of seasonality, because it happens, and then it comes right back down. So I don't want it to just jump around like that. I'd rather just focus on break evens. And consistently, we're among the lowest anyway in costs, as far as I can tell. And so that's the way we look at it there. Plus, we're not too worried about our situation being market related because we're in an economic opportunity zone. It's a unique situation. Our area doesn't have much competition, so we generally enjoy lower than most costs just simply because of that. And so that's fantastic. But again, no need to declare victory on something that I personally find not as relevant as total costs, and that's why we focus on that.
I agree. I mean, yeah, if you think about your energy plus hosting fee is going to be obviously different from other mining machines, so that's a wrong metric to use. But when you look at the operating cost, which is the next cost that you look at, yours is going to be probably the lowest of all the mining machines because you've literally only got a handful of employees. I think it was 3 last time we had a discussion. 3. So let's hope they all turn up for work.
How many times have you won in Employee of the Month, Rob? You get it every 4 months or 3 months?
I don't think it's appropriate for the CEO to win it, so it's always the other guy.
Just alternating back and forth, yeah.
Yeah, we
you told the other two there's a 50-50 chance it's going to happen this month.
Exactly. Print up a bunch of plaques, just put a sticker a month on for each one, so it's just 2 people anyway, so it's easy. We will be looking actually, and I might as well mention it here, to add a little bit more people because it's probably a little untenable to be doing everything among 3 people, but modestly, maybe 1 or 2 people to go from 3 to 5. Still far short from the dozens that I see our peers use, which they may need, but we don't think we do.
Fair enough. I'll keep moving through the list here, Anthony. You've done a good job of kind of just adding in additional questions where relevant. So I'll just keep going. Next one we had from the subscribers, Rob, was on the debt situation payback schedule. Obviously, this is a big focal point now in the M&A discussion, right? As companies are looking at opportunities, what's the debt situation, the payback period, things like that. What is the update that you can share at least on that for right now?
Yeah, I'll still have to defer to our 2023 numbers because we haven't given updates since then. But at the time, we owed about 350 in Bitcoin, approximately. And Bitcoin denominated debt, it's a great piece of debt because one, it's denominated in Bitcoin. So if prices collapse, we're not going under because we can no longer pay our US dollar values for it because we were only paying the Bitcoin anyway, which really hasn't changed. And it's a fantastic interest rate. We're only paying 6%. I challenge anyone to find a rate that low right now. And it goes through to March 2026. So I kind of don't really care as long as I'm taking care of it until closer to then, which gives me at least a clear year to even start really thinking about it. And then I have a year left anyway, thereabouts, because we're in May now, which is a little short of March, but you know what I mean. And so we're very comfortable. It's a nice little piece of debt. We're in very good terms with our lender, and are actually looking forward to potentially working with them to do another one once they're ready to lend again.
I know a non-public miner has done exactly the same as what you've done there, and they said it was the best. It was the best way of managing the debt. And again, they've got a reasonable. I don't know what the interest rate is, but when they explained to me, it was a really good deal, and it was actually it's a sensible way of looking at it if you think about it. Bitcoin backed, it's like you're basically covering yourself there, aren't you, in case anything goes.
And I think that's the concern that we have, is that everyone looks at making decisions based off of a rising Bitcoin price. That's exactly the wrong way of doing this. This is a commodity business. We need to manage this based off of worst case scenarios at all times. And so that's how we manage things. And that's the reason why our costs are so low, and we haven't had our gross profits have always been positive, is because we've always made sure that our costs are low. We're not overextending ourselves. And so doing heavy debt in US dollar terms on machines that have a rapid depreciation is a recipe for disaster that we saw coming. And unfortunately, some of our peers really got bit by that. Whereas on our side, because we did a Bitcoin denominated loan, we sailed through with really no issues whatsoever.
That's the benefit of the CFOs, Rob, I guess, running the company, eh?
It is very helpful to have capital markets experienced people on, and that's certainly helpful.
Just looking forward now, what's the sort of like the key catalyst to watch out for now in terms of looking forward over the next few years, not just this year?
Yeah, well, focus for us definitely is a lot of this year, but we're going to do what we do, which continuously, hopefully, generate the above average performance of Bitcoin efficiency, continue to keep our operations tight and low cost. We're hoping and looking forward to continuously doing that, and we definitely have a pathway, and of course, a 3-year track record of already doing that. So that's certainly something that we'll be always looking for, because I think investors, as this industry matures, are going to care a lot more about operating execution as opposed to just seeing big numbers for growth, because those big numbers for growth might come with high debt operations that are not actually profitable, that will ultimately run into problems at some point. And we're starting to see that with some of the public miners and other miners that I've talked to now, where with the halving, they're now struggling, and we're seeing that. So that's part of it. But the other thing too is, as I said, 75% of our time is working on growth, M&A, or other things like that. And so I'm hoping to be able to start making some announcements. Like, again, nothing's happening yet, just to be very clear, but we are spending a heck of a lot of effort on doing these things. And in my opinion, it is more a matter of selection, not opportunity. Always want to see more opportunity. So again, Anthony, if you know big guys who might be selling, or any guys who might be selling, certainly let us know. And anyone who's watching, please let us know. But we are actively looking, and for us, it's really who do we want, when to put a trigger, are we okay with what they're asking for? Which is really the biggest part is we do need to see some rationalization or coming to earth of some numbers that people are expecting. And I think they need to be disappointed first before they start realizing what things should be valued at.
Just a final thought for me, and I'll hand over to Brian Sten, is if you were to say, 5-10 years time, how do you see this space in terms of, the number of public miners that will see it in that point in time? Then, we're still a very young industry from a public miner perspective. I mean, the oldest public miner is Hive Digital, and it's between 6 and 7 years. 2017 they went public, and HUT and Bitfarms and Riot were probably not far behind them. So that's the oldest miners. But actually, with energy prices, and there's always that question about the energy companies coming into the market. What do you see the landscape in, say, 10 years time from where we are at the moment? Do you see it changing drastically?
Yeah, I think like any other industry, we're now exiting out of the extremely hot period. Actually, maybe not, because I think we still have a lot of upside. But for Bitcoin miners, I think the first cycle is definitely over, and we're going into the second cycle. I think we're probably going to consolidate into maybe 8 to 12 quality miners that are now efficiently run, as opposed to growing at any size. I think the size guys will start getting exposed, for lack of a better term, and fall away and be bought out as their business models don't work. So we're going to see that, and hopefully Gryphon is one of those, and that's how we designed ourselves. And we will probably start seeing the emergence of other miners who use it as a non-core thing. I use an example, and what I mean by this is, for example, an energy company who has excess energy that they're really just shooting into the ground and getting zero out of it. It makes a lot of sense for them to have mining operations simply because they're using the power that was going away for nothing anyway. And so even though they might be operating at a loss, it's better than a not. It mathematically works out better for them to be doing something as opposed to just getting rid of it. And the parallels I see is from my traditional background of commodities mining, where you would see these mega mines that produce 5 different metals. Their core one, for example, might be gold, but they would also have copper, silver, and a whole bunch of other stuff. Where the other ones on their own aren't economic, but because they're pulling the gold out of the ground anyway, and these are coming along with it, they might as well have these other circuits pulling out these other metals because they're worth something. And so we might start seeing players like that, where you have a large energy company who has excess power and thought, hey, we might as well mine some. And because they're at such scale, they become pretty significant miners already. So that will probably be part of the case. And if there's anything else that's adjacent to that, that'd be similar, where someone happens to have a lot of excess power, and they might as well use it with Bitcoin mining. It's funny. There's one of my colleagues in YPO actually has a large plant with a substation attached to it because they use a lot of power. He realized that he wasn't using enough of it, and so in one of his rooms he has Bitcoin miners in there. I was shocked. He just decided to use the extra power. So stuff like that could happen at much larger scale.
Yeah.
Really interesting question, Anthony, and I love that answer. That's exactly how I see it too, Rob, is a couple big core miners and then auxiliary miners that kind of have something, maybe data center companies or power companies, like you say, that have some additional resources. But really interesting. Great discussion today. This is our first interview kind of in terms of production updates post halving. So it's really interesting to hear how things have progressed, how things have changed in terms of outlook and the growth strategy that Gryphon has. As we know, you've got big aspirations this year, Rob, and obviously a lot of different dynamics to consider as part of the process of picking a partner or an acquisition here. So really interesting discussion. You guys, if you've still watching the video at this point, hopefully you found some value. Make sure you hit the like button. Feel free to subscribe to the channel. If we didn't get to one of your questions, let us know in the comment section below. We're going to have Rob back in the near future here, go through additional questions and updates. Rob, hopefully you've got some M&A updates for us in the near future, and we look forward to having you back soon.
Thanks again for having me. Always really enjoy these things, and this was one of them once again.